Hi everyone, welcome back for another update on the San Diego real estate market. Right now, the median price of a detached home in San Diego is over $1 million, trending up more than 13% year over year. This is a hot market and homes are generally selling quickly. How long will this last? Let's talk about the latest trends in the housing market and what they mean for buyers and sellers.
Let's have a look at the month-over-month trend, and then we'll go ahead and check out the longer charts.
Sounds good.
Okay, so new listings are up only 0.2% from last month, and pending sales are down 8.2%. Closed sales are up 4.8% from the previous month, and the number of homes for sale has increased overall by 14%, with median price rising 1.1%.
Wow, the number of homes for sale up 14%. So would you say this is signaling the end of the seller's market?
Possibly. I mean, up 14% looks like a lot, although it's 14% of an already fairly small number. What's most striking to me is the decline in pending sales. That definitely signals slowing buyer demand, and median price jumping up 1.1% is impressive in just 1 month, although if you look at last year, median price was jumping up a lot more than that month over month. It really does seem to be slowing down. So if I had a home I was thinking about selling, I might be thinking to myself, this might be the top of the mark for now.
Okay.
Yeah.
Well, let's check out the long-term trends.
Great. All right, so looking at the longer term trends here, the year over year numbers, and then the long chart here, the 10-year chart.
You know how I like long charts.
Yeah, long charts are important in any financial market, and they definitely tell a story here in the San Diego County real estate market. Let's just look at new listings really quick for the last 3 years. They were low in 2021, they were lower in 2022, and they're way lower in 2023, off 34.5% from the year before, which was off 16% from the year before that. That was off 8% from the year before that.
And this is detached homes, but you see a similar pattern with attached.
Right, yeah, it's similar. And then year to date, same thing, just less of everything, less. And then when you look at this long chart here, we're going back 10 years here, and the pattern is the same. I mean, you're looking at 2012. Here's November coming into the new year, and then from November coming into the new year, and again and again and again and again and again for years and years. And then all of a sudden we get here, 2019, just a little bit before the pandemic. It gets really, we have again a similar pattern during the pandemic, yet less of everything.
Even so, a similar pattern.
Yes.
And
then coming out of this last November, we just did not see that bounce in activity. It just isn't there. And
you can't sell homes if there aren't any for sale.
That's right. And so, less volume, it just means less volume. So it's a hot market for sellers right now in terms of not very many homes for sale, and buyer demand is still there. However, for how long at the rates where they are, which we'll talk about, I'm sure. But yes.
We can't talk about the market right now without talking about rates.
You sure can't.
Try and put it off as long as possible, but we're going to have to get to that part.
But it is, it is something that has completely changed the dynamic, and we have never seen this little activity in any given time period for the last 30 years or so. This is the least amount of activity that there has been for a long
We've been
long
doing
time.
this for 20 years and I've never seen anything like this.
Never seen anything like it. So let's go ahead and take a look at closed sales.
Okay.
Same story. In 21, they were down, 5.5% from the year before, and then they fell off 28% in 22, and now from that drop, we have another 19% off of closed sales. Looking, again at detached homes, similar with attached, and then year to date, you see the same thing, just less stagnation. Except for prices. Prices keep going up. You cannot have stagnation and then prices going up forever. It doesn't work that way. And from experience, I know whenever I start hearing from industry experts reasons why it won't stop going up. Everybody's trying to invent reasons why. They were doing that in 2006 and 7 too.
We all know what happened after that.
Yeah, and I'm not predicting a crash here, but I am.
We've got totally different dynamics now.
Yeah, completely different dynamics. However, it just can't keep going up and up and up the way it is now and be sustainable. And again, with the long chart here, same pattern until you get to 2019, 21, 22, and then things just get really, really weird. Now, median sale price, we've already touched on this, it keeps going up. And that is, last summer we had this 15% drop off. And that's what I'm talking about. This was not a crash. This was a 15% decline.
Shakeout?
Yeah, it was a shakeout, a 15% decline in median sale price. And it bounced back. But if you were trying to sell your home in here, that's 15% of this median price. That's a lot of flipping money. So if you want to sell, if you have a move you want to make, you don't want to be in this trough here. You want to be up in here, which is where we are now. So good time to think about selling. Give us a call on that one. And then let's now move on to the elephant in the room.
Ouch.
Interest rates at 7.12. This is not as high as they've been in the last few weeks. The high was back here a couple weeks ago at 7.23, but over 7. This is a lot. This represents a couple of $1,000s a month for folks on a median priced home and more. If you're looking at a less than median priced home, like a $700,000 for instance, that's about a $2,000 a month difference from rates where they were.
Wow.
It's a lot more money. So that's and so people say, well, should I wait to buy? We always say the same thing to buyers, and it's true. No matter where rates are, no matter where prices are, really, owning is always better than renting financially, because you're not just flushing money down the toilet every month, and you just got to get in where you can fit in. And the long-term trend is always up. I'm saying that we may have reached peak pricing for now. That doesn't mean forever. It just means for now.
And you saw what happened last year. We had the 15% shakeout and then right back up.
Right back up, and right back up with higher interest rates, which made it worse for buyers. There's not that many homes on the market. So, if you're thinking of buying, if you're thinking of trying to time this thing, if you hit the timing just right, you got lucky. It's not because you were
very difficult to do.
It's not because you're super savvy and know how to read tea leaves. It's just because you got lucky. So, I would say, if you feel like it's time to buy, or if you're in a position to buy. Let's help you get the best deal we can. And we sellers are way more willing to work with buyers right now on rate buy downs and things like that. It is workable. Is it challenging? Yes, but workable.
What do they say? Marry the house, date the rate.
That's what they say. That's what they say. And like everything else, rates are not going to stay high forever. And people talk about the cost of refinance, but the cost of refinance is more than offset by long-term appreciation. I'm not talking about short-term appreciation. I'm talking about long-term appreciation, which, unless the entire world, breaks down, Southern California real estate has been going up long-term for, 100+ years. So
yes.
I don't think you got to worry about that. But it's challenging. You need somebody to help you with this, and
somebody who knows what they're doing.
As far as I'm concerned, we're just the folks to do that for you.
All right, well, are we good for today?
We certainly are.
Okay, well, thanks for stopping by. We hope you enjoyed this video. If you did, please like, share, leave us a message in the comments, and we'll see you next time.